Hey everyone, it's Mike from Orderflows, and welcome back to my channel. It's been a while since I posted a video. I was a little busy over the last month, but hopefully I get back into the swing of cranking out some educational videos for you guys. And today's video topic sort of comes on the back of a comment that I saw on one of my earlier videos about trap traders and how to take advantage of them. And basically, it comes down to understanding the different types of trading that's taking place. Now, before I jump in, if you enjoy my videos, be sure to subscribe to the channel. Hit the subscribe button if you haven't already. We keep growing every day, adding a lot of subscribers. And, if you got an interesting comment, be sure to leave it down below. I do look at the comments. I don't often have time to reply to every single one, but I do check into them time to time. All right, so again, trap traders is a term that, a lot of people use. I see people using them on charts, a bar chart. Oh, there's trap traders here. But really, you can't really tell on, in my opinion, on a bar chart. Okay. But if you're looking on a footprint chart, whoops, wrong chart, it's a little bit easier to see. And generally, when you see trap traders, um, you're not going to see volume on the other side. And what do I mean by that? Okay, so for example, down here at this little swing low, you see volume coming down into low 199.74.26, but nothing on the offer side, 0.00. Okay, are these traders trapped? Well, probably. Probably a big seller just came down here, swept the market down to 8.25, and then it just immediately bounced back. And sort of the comment that I saw is, how can you say there was buying taking place down here because it's selling, right? There's no buying. He's 0.00. Well, you don't understand how the two-way auction works, because what you have is different types of buying and selling, but you have aggressive buying and aggressive selling. You have passive buying and passive selling. So the people that sold down here at 8.25, that sold 26 lots, well, who'd they sell it to? They didn't sell it into thin air. They sold it to passive buyers. So there was buying taking place, but you have 0 here, 0 here. There just wasn't aggressive buying taking place, right? That's why it's 0 and 0 here. So basically what happened is, those big orders just went through the market, just hit everything down there. Once that order got filled or completed, the market immediately bounced back, right? And it started trading back up at 09. And the best way to describe passive traders is by looking at the depth of market, the dome, right? Price dome, price ladder. People got different terms for it. So here we are, okay? And you'll see there's bids and there's offers. Okay, so market's currently 99.75 bid at 52 even. The people that are trying to buy it on the bid, these are passive buyers. The people that are trying to buy it below the bid are passive buyers. People that are trying to sell it on the offer and above are passive sellers. Okay, so the 26 that got sold here, the 74 that got sold here, the 199, it got sold into bids, passive buyers, resting liquidity in the market. That's down here, right? Because again, right now we're trading around 98.75, but there's bids in the market, right, at 97, 97.25, 97.5. For these bids to trade, for these passive buyers to get filled, you're going to need an aggressive seller to come in and clear out the 98.75, 98.5, 98.25, 98s. 97.75 down to 97.50 and below for these passive buyers to get filled. Now they may never get filled. That's the difference between a limit order, right, or a bid below the market. Is there's no guarantee you're going to get filled. You're only going to get guaranteed to fill if you trade at the market, you hit the bid or lift the offer. Just as these offers above the market, these are passive sellers. Okay, if the market, right now we're trading 98.25, but if it gets back up to 52 even, there's 102 lots there. At 52.00.5, there's 114. Okay, it doesn't mean it's going to trade there, but these are passive sellers. So when you see the volume like this, right, 26, 74, 199, but 0.00, it doesn't mean there's no buying. It just means that there's no aggressive buying taking place. When you see volume on the offer side trades, it is aggressive buyers coming into the market. When you see volume on the bid side, that means there was aggressive sellers in the market. Aggressive sellers sell to passive buyers. Aggressive buyers buy from passive sellers. right? Then what causes the market to go up is the aggressive buyers are lifting the offers, clearing it out to the next offer, to the next offer. Just as if a market is going down, it's people selling into the bid, clearing that out, selling into the next bid. Okay, and sometimes you get a push down, right? A little sweep, it's just a big order comes down and sweeps over the order book. Once that's done, market just sort of bounces back to where it was before, like right here. And the same thing would be true on the offer side. You can see here 0, 0, but 71 trade on the offer, 14 trade on the offer. That doesn't mean there was no buying, because you can't, for every buyer, there's a seller. Okay, it's just whether it's aggressive buyer or aggressive seller, or just keep this in mind. Aggressive buyers buy from passive sellers. Passive buyers buy from aggressive sellers. So even though there was no aggressive selling here, this is euro currency at what is that, 108.88, 108.87.5. That doesn't mean there was no selling taking place. There was limit orders here at 88. There was limit orders here at 87.5. Aggressive buyers bought from those passive sellers. Think of it this way, okay? Understanding aggressive buyers and aggressive sellers. Okay, this is realtor.com, just looking at houses. So for example, right, this beautiful house here, better one here, big one, crazy price, it's insane, 5,999,000 even. Okay, so just under $6 million. He is a passive seller at 5.9 million. Okay, if I had the money and I want to buy this house because I'm so in love with this house, I want to buy it, right? I would pay what he's trying to sell it at. He's the passive seller. I'm the aggressive buyer because I want this house. Now, you'll notice, right, he dropped the price by $501,000. So actually this house, $6.5 million. But he's lowering it down. Now he's starting to get a little bit aggressive, looking for a bid in the market, right? He's checking, maybe I could lower my offer from up here down to where I think the market is, right? Still joining the offer. Now, if somebody came in, it's like, you know what? I like this house, but I don't think it's worth 5.9 million. I think maybe it's worth 5.5 million. So what that buyer would do, he doesn't think it's worth 5.9, so he's not going to be aggressive and pay 5.9. He's going to bid $5.5 million, right? He's going to join the bid here at 5.5. So the house is not going to sell because I have a buyer at 5.5 where I've got the seller at 5.9. So either for this house to trade or get sold, the seller would have to go down and hit that bid at 5.5 million, or the buyer would have to go up and lift the offer at 5.9. Okay, that's the difference between aggressive buying and aggressive selling. Okay, sometimes it gets lost in the market because people just see the volumes that go through, right? They just see, it traded here at 88, traded here at 87.5. Okay, and then they see the 0 here and they think, well, there was no trade there. Okay, so there was no buying taking place, or no selling taking place at 87.5. Well, actually there was. It was on the offer. It was a passive seller that was selling to an aggressive buyer, just like down here, right? You had limits in the market, right? Just like, right, the house is 5.9, but in this case, market's 52.08. At this point, it was trading a little higher, 52.09. But there was a seller came in here and hit the bid. He was aggressive seller selling into passive buyers. So passive buyers bought down here. Okay, that's the difference between aggressive buying and passive buying, right? If there was aggressive buying taking place, you would see volume here on the offer at 8.5, volume on the offer at 8.75, but there wasn't. Okay, you just had passive buying taking place from aggressive sellers, right? An aggressive seller, remember, Aggressive seller sells at the market. They hit the bids. Aggressive buyers buy at the market. They lift the offers. So that's going to end it on this video of understanding sort of the difference between aggressive buying and aggressive selling, as well as passive buying and passive selling. Because remember, right, it's not, people aren't selling it into thin air. They're selling it into a bid, or they're buying it from an offer, right? The liquidity in the market. Think of, there's people that provide liquidity. Think of it this way. Get back to our dome real quick. These people are providing liquidity, the passive buyers. The passive sellers are providing liquidity, right? It's the people that buy at the market are removing that liquidity. People that sell at the market are removing that liquidity. All right, guys, so that will end it on this video. Again, if you haven't already, be sure to subscribe to the channel, hit that like button, as well as, if you got any comments, be sure to leave them down there in the comment section. All right, everyone, I'll catch you guys on the next video. Take care.